or not? Let's bring on board then Aditya Kondawar to discuss that point forward. Aditya, hi, morning. Aisha here. And, the question on everyone's mind has been really that massive private market valuation that Lenskart has seen. What's been your assessment of its current valuation band for the IPO? And does it really justify this kind of growth potential? Or is there froth built in from late-stage investors?
A very good morning to you, Aisha. I think this is the most important question today for Lenskart IPO, right? And if you actually monitor all the chatter that is happening around the IPO, right? Everybody, and I mean everybody, is talking about how expensive the valuation is. But just before we go to valuations, I think we should all applaud a successful entrepreneur like Piyush Bansal, right? I mean, from nothing to a 70,000 crore brand, which derives almost 40% revenue from abroad. But, coming back to your question, obviously the IPO is quite expensive, at 230, 235 times price to earnings ratio. I think you would have to stay invested in that company for a couple of decades to actually recoup your money back. I'm not even talking about any growth, right? So definitely a very expensive IPO to start with.
And Aditya, hi, this is Harsh also joining in. Give us a sense, and we were chatting earlier today morning. You spoke about how 210 times, of course, is the current price to earnings. But if we remove, and Snehi also spoke about it, if we remove the one-off, which came through in FY25, the price to earnings is closer to 550 times. So how should one look at this or justify this kind of valuation from an investor lens? Give us a sense. I understand that you may be in early stages of growth, and that's what the management keeps reiterating. But and maybe the scale takes care of it. But how should one look at this as an investor?
Good morning, Harsh bhai. So two things over here. I mean, there are two things that nobody is talking about, and I'm very glad that your channel actually pointed out the one-time gain, right? So the real profit for FY25 comes closer to 135 CR, and like you said, the PE is in excess of 500. Now, if you look at the Q1 FY26 PAT, that is closer to 61 crores, which means that the FY26 annualized profit would come closer to 250, 260 CR, which is again closer to a 300 PE. Now, as investors and specifically long-term investors, I feel that they should monitor the management commentary. They should monitor how the company scales up its production and also its sales eventually, right? Now, I come to my second point, which is even more important because as of June 2025, the company's capacity utilization is at a low 46%. And despite that, the company is putting up a 1,500 crore capex in Telangana. Now, due to this new capex, obviously the capacity utilization will come even lower, and there can be a huge negative operating leverage playing out. So as investors, I would suggest that they can wait out till the capex happens. They can wait out till the exponential growth actually kicks in, right? Because I still feel like Piyush Bansal said in his interview, they're still in a sales formation or an initial stage. So I think the company needs to be given some time.
Right. But Aditya, tell me, I mean, while Lenskart, of course, has the scale, the eyewear space is, pretty low ticket and competitive, right? And there's so much of the unorganized play as well. How sustainable do you think are the margins? And what roadmap do you think could lead to consistent profitability for Lenskart?
So Aisha, interestingly, like I said, 40% revenue for Lenskart comes from abroad. This is all thanks to their Ownsday acquisition, which is a Japanese brand. I think they have around 270, 280 stores in Asia thanks to that acquisition. Now, I was just looking at the RHP and, the operating profit margins and the PAT margins on the international business is almost 2.5 to 3x of the Indian business. So while everybody is focusing on the Indian market, I think a very good opportunity for Lenskart can play out in overseas markets, where a value-driven product can help them make strides into a lot of households, right? So I think that negative operating leverage, obviously, like I said, it is a problem for them. But then if international sales actually pick up, if exports pick up, I think they have a very good opportunity on their hands. But again, this is an optionality, right? They haven't really said anything about this, and this is all just our something that we are thinking.
Some of the metrics that Lenskart is urging investors to think about and track is, and in my conversation with the Lenskart management, what they're urging is look at metrics like how many eye tests we're doing rather than how much of top line that we're growing by. Would you reckon that that's the right way to look at some of these businesses, 10 times sales, but the right way to, or the right metric to look at it is how many customers are actually walking in and doing those tests, because they will potentially become customers going forward. Is that the way you look at this? Because platform businesses obviously need to be thought of very differently. And while this seems like an expensive IPO on the onset, could that be a valid argument is what I'm trying to get to.
So Harsh, I disagree with that metric, because, sales is vanity and, profits and cash flows are the reality, as simple as that. If you have to, in fact, Mr. Piyush Bansal talks about this on his Shark Tank episodes, right? When you have a business where the cost of education is very high for a particular customer, right? So it may very well happen that, you may end up creating the market, but someone else can come up and destroy that market or eat up the whole market. It happened in retail with Future Retail. It happened in low-cost carrier with Sahara or Air Deccan, right? Where the initial company created the market, they educated the customers, but someone else came in and then they dominated the market, right? So I do not really agree with the number of test metric. If they were earning something on every test that they did, then definitely yes, it would have been a key metric to track. But then today, as it stands, sales is the only metric that you should keep an eye on, and obviously the margins. And as to the platform company question, Harsh, I don't think this is a platform company, to be very honest. I think this is a omni-channel sales company. And obviously they employ a lot of tech in their factories. They do a lot of recycling. They have helped India replace a lot of imports that we were initially doing from China or the other countries. But, like ideal platform companies like a Zomato or a Cartrade or a Swiggy, I don't think Lenskart has that J curve of a growth that they can do, right? Like we discussed, this is a physical product company, right? So I don't think this is a platform company at all.
Okay. You look at this as consumer tech or not at all?
I would look at it as a consumer company, to be very honest. I mean, you look at a company like Exor Luxottica, right? They have a brand called Ray-Ban. Now they have a JV with Meta, wherein they create this virtual glasses, right? Wherein you can record videos, you can take images. So I would look at those companies as a consumer tech company. For a Lenskart, I think the only tech that is today present is in the way that they do dispatches, or in the way that they do lens fitting for the customers, or the way that they produce or recycle those particular lenses in their factories. I think the tech component is quite less today in the company. And I'm obviously, let's see how it scales up going ahead, right?
Aditya, absolute bottom line. Don't buy it now. Wait and watch. Let the story play out a little bit more. You will get opportunities to buy it at lower rates. That's what I hear you say. At lower valuations.
Yeah. Okay. Wait and watch, for sure, yeah.
Okay. All right. Aditya, thank you so much for coming in. We'll let you go on that note. And
thank you for having me.
And that's, of course, on Lenskart. Extremely expensive. I think Aditya seems